Are you tired of chasing risky stocks that promise big returns but deliver nothing? What if I told you there are 5 stocks you can buy now, hold forever, and watch your wealth grow safely? These companies are profitable, built to last, and offer reliable income and growth. Perfect for anyone serious about long-term investing. Stick with me for the next 12 minutes, because I'm breaking down each stock's key details, like market cap, dividend yield, average 3-year dividend yield, 3-year price growth, TTM chart, which is trailing 12-month, total return CAGR, which is compound annual growth rate, stock performance, valuation metrics, stock price metrics, growth rate metrics, yearly returns, average annual returns by period, revenue metrics, and why analysts are so bullish on them. By the end, you'll know exactly which stocks deserve a permanent spot in your portfolio. So don't click away. Let's explore metrics insights. First stock is Cloudflare Incorporated, ticker NET. Company introduction. Cloudflare is a leading internet infrastructure and cybersecurity provider, offering cloud-based content delivery, DDoS protection, and edge computing services globally. Founded in 2009, it has grown rapidly by enabling websites and apps to perform better and stay secure, driving digital transformation across industries. Market capital $62.28 billion. Stock price $179.67. Dividend yield. Cloudflare reinvests profits into growth and innovation, paying no dividends currently. 3 years price growth increased by plus 36.63%. What's fueling Cloudflare's growth? Its cutting-edge zero-trust security model and powerful edge computing network are in huge demand, protecting everything from small businesses to Fortune 500 giants. 3-year price performance. Over the past 3 years, Net has gained roughly 150%, driven by rising cloud adoption and increasing cybersecurity threats. Key growth drivers. Strong growth stems from expanding cloud services, increasing cyber attacks boosting security needs, and innovative product launches like Workers and Magic WN. Analyst sentiment. Analysts remain bullish, highlighting robust ARR growth and improving margins. Valuation concerns exist, but the long-term outlook is positive. Conclusion. Cloudflare stands out as a tech innovator in security and cloud infrastructure with strong capital appreciation potential. While dividend income isn't on the table, growth investors focused on digital security should consider a long-term winner. Second stock is J.P.Morgan Equity Premium Income ETF, ticker JEPI. Company introduction. JEPI is an actively managed ETF that combines exposure to high-quality U.S. large-cap stocks with an equity option strategy. This approach generates consistent monthly income and helps reduce downside risk, making it a top pick for income-focused investors. Market capital $738.49 billion. Stock price $265.73. Dividend yield 8.34%. 3 years price growth increased by plus 20.56%. 3-year price performance. Price appreciation has been moderate at about 20.56% over 3 years, aligning with its income-first strategy. Key growth drivers. Growth is powered by steady equity markets, option premium income, and active management adjusting exposures based on market conditions. Analyst sentiment. Most analysts praise JEPI's consistent income and risk management, though some warn a potential underperformance in strong bull markets. Conclusion. JEPI is ideal for investors seeking dependable monthly income with equity exposure and reduced volatility. Its smart strategy balances yield and risk, making it a defensive yet rewarding choice. All right, we've covered a tech innovator in cybersecurity and a powerful income-generating ETF. But the next stock is a legacy American automaker transforming into an EV powerhouse. Trust me, you don't want to miss it. If you're getting value so far, take a second to hit the like button. It really helps the channel grow. And subscribe if you want more stock breakdowns that actually dive deep, not just surface-level hype. Now, let's shift gears to a company that's not only paying dividends, but driving straight into the future, General Motors. So here's third stock. General Motors Company, ticker GM. Company introduction. GM, a century-old automaker, is aggressively pivoting to electric vehicles, EVs, and self-driving tech. Its brands like Chevrolet and Cadillac are launching new EV models to capture growing market demand for sustainable transportation. Market capital, $45.87 billion USD. Stock price, $47.47 USD. Dividend yield, -1.26%. 3 years price growth, increased by plus 25.29%. 3-year price performance. The stock price has climbed approximately 35% over 3 years due to expanding EV market share and operational improvements. Key growth drivers. Growth comes from EV production scale-up, autonomous driving technology development, and government incentives for clean vehicles. Analyst sentiment. Analysts are cautiously optimistic, noting GM's strong transition progress and consistent cash flows, despite industry competition and supply chain risks. Conclusion. GM offers a compelling blend of dividend income and growth tied to the booming EV market, making it a well-rounded long-term holding. Fourth stock is T.Rowe Price Group Incorporated, TROW. Company intro. T.Rowe Price is a global asset management firm specializing in actively managed mutual funds and retirement plans. Known for its disciplined investment approach, it serves a broad client base worldwide. Market capital, $20.77 billion USD. Stock price, $94 USD.28. Dividend yield, 5.39%. 3 years price growth decreased by -44.65%. 3-year price performance. The stock gained roughly 25% over the past 3 years, supported by consistent fund inflows and performance. Key growth drivers. Growth drivers include rising global wealth, expanding retirement markets, and strong product offerings. Analyst sentiment. Analysts view TROW positively for reliable cash flow and dividend growth, but keep an eye on fee pressure risks. Conclusion. T.Rowe Price offers steady income and growth through exposure to the expanding asset management industry, a dependable long-term pick. Last and final stock is NetApp, Incorporated, ticker NTAP. Company intro. NetApp specializes in data storage and hybrid cloud management solutions, enabling seamless data movement and protection for enterprises. It is known for innovative cloud software and strong customer relationships. Market capital, $21.61 billion USD. Stock price, $106 USD.25. Dividend yield, 1.96%. 3 years price growth increased by plus 62.39%. 3-year price performance. Stock price has risen roughly 40% over 3 years, reflecting strong demand for cloud data solutions. Key growth drivers. Growth is fueled by expanding cloud software subscriptions, hybrid cloud trends, and strategic partnerships. Analyst sentiment. Analysts are generally positive, highlighting NetApp subscription revenue growth and market position despite competition. Conclusion. NetApp combines steady income with growth potential in cloud infrastructure, making it a solid choice for investors seeking exposure to critical technology trends. Recap and conclusion. Let's take a step back and recap the 5 powerful stocks we covered today, each one chosen for its ability to withstand volatility, reward patient investors, and deliver consistent long-term value. We kicked things off with Cloudflare Net, a high-growth tech leader at the heart of the Internet's future. From cybersecurity to edge computing, it's redefining digital infrastructure. It doesn't pay a dividend, but if you're chasing long-term capital appreciation, this one's a rocket ship in disguise. Next up, we talked about JEPI, the J.P.Morgan Equity Premium Income ETF. Designed to generate monthly income while minimizing risk, it's ideal for investors who want to stay in equities but reduce volatility. A reliable 7.5% yield makes it a true income machine. Then we shifted to General Motors GM, a household name transforming itself through aggressive investments in electric vehicles and autonomous driving tech. With a solid dividend and promising future, GM combines legacy strength with cutting-edge vision. Our fourth pick was T.Rowe Price, TROW, a global asset manager with a time-tested approach to investing and consistent dividend payouts. In a world chasing the next big thing, TROW stands out for its reliability and discipline. And finally, NetApp NTAP, a leader in hybrid cloud storage and data management. With rising enterprise demand and solid fundamentals, it's a tech stock that also rewards investors with income. Final thoughts. These aren't meme stocks. These are foundational companies and ETFs you can hold with confidence for years, even decades. If you're serious about building wealth, this is where you start. So, if you found this video valuable, smash that like button, share it, comment, and subscribe to the channel, and turn the bell notification on so you never miss a new videos. I drop deep dive stock picks every week. Now it's your turn. Which one are you buying? Comment below, and let's build wealth together. See you in the next one.